China is normalizing because that the pandemic is under control. The issue is that where do we go from here? And now the leadership is talking about internal circulation. We don't know what it means. Actually, the right thing is rebalancing the economy. You need to balance investment against consumption. But so far, we still see that the government is still propping up investment to get the economy going. So that means that we have more overcapacity down the road. So China is facing an enormous challenge in terms of future exports. And there's urgent need to rebalance the economy, to shift the economy to consumption. But so far, it's still talk. So this imbalance will weigh on corporate profit in the coming years.
And it seems that you're suggesting that some of the support that has come from the government to help and thwart the impact of the coronavirus is leading to a market bubble. Do you see us in a bubble right now? And if so, what will it take to burst that bubble?
Well, there is a huge bubble in the U.S., just like Y2K. Now, people may not remember. In 2000, the people were scared that all the computers would stop working, and the Federal Reserve pumped a lot of money. That led to the dot-com bubble, and it popped when the Fed normalized liquidity. Now we're seeing this mistake repeated on a much bigger scale. $2.3 trillion from the Federal Reserve, another $2.3 trillion from the federal government. And a lot of that money has gone to the stock market. So the market is very, very vulnerable. And if there's a bad news, it could be catastrophe. It could be a catastrophe. And China has been keeping the property market going for a long time. The property market has been in bubble territory for a long time. But China is supporting the property market by kind of using the banks to support the property developers when they are in trouble. Don't force them to repay. So this kind of strategy has kept the property market going. And we don't know where do we go from here, because the government seems to think that they can do this forever. But I think that the issue is still the U.S. market. If the U.S. stock market pops, there will be a huge knock-on effect on China's financial asset market.